Hello, everyone, and welcome to SCORE Fairfield County's live webinar on the 10 biggest legal and tax mistakes business owners make and how to prevent them. I'm Peter Talion, the webinar coordinator and a business mentor here at SCORE Fairfield County. I'll be your host today, and our presenter is Cliff Ennico. More on Cliff in just a moment. First, some brief information on SCORE. SCORE is the nonprofit national partner of the Small Business Administration with over 10,000 volunteers nationally. In Fairfield County, we have about 100 volunteers with a wide range of industry, process, and subject matter expertise. We offer three primary value-added services to small business owners. Free one-on-one counseling, face-to-face, video, telephone, which can be accessed via Request Mentor link on our website or via the link on the screen. Educational workshops and webinars, such as today's, and extensive resources on our website, including a network of subject matter experts at your disposal. Our next live webinar will be in 2 weeks on Tuesday, September the 23rd at noon, when Jennifer DeRosa will be presenting Large Language Models, Seeding and Getting Found in the Age of AI. Look for the specifics on our website, www.fairfieldcounty.score.org. We also have a large number of recorded webinars on our website that cover a wide range of business topics. These can be viewed at any time by clicking On Demand Webinars. Some information about today's event. We have set aside time at the end for Q&A. If you have a question, please use the Q&A button at any time during the presentation. It is located in the lower part of your screen. Our webinar will end sharply at 1 to respect your time. The session is being recorded, and a link to the recording will be available at fairfieldcounty.score.org within the next day or so. Now it's my pleasure to introduce our speaker. Cliff is one of America's top small business lawyers. He is best known as the former host of Money Hunt, the PBS television series, and the author of Succeeding in Your Business, a nationally syndicated newspaper column. He is a frequent contributor to Entrepreneur and other small business magazines, has hosted over 100 videos on YouTube, and is the author of 17 books on entrepreneurship and career management. He is one of our most popular webinar speakers. Cliff, it's all yours.
Hey, thanks, Peter, and thank you very much for that lovely introduction. First of all, I'm delighted that you all came out today. I mean, for years we've said at SCORE and elsewhere that the surest way to make sure that people don't show up for a webinar is to put the words legal or tax in the program title. I'm delighted to see we have so many people here today. I mean, this is a topic that, let's be very honest about it, it's not going to put a penny of revenue into your pocket, but it may potentially save your life. In business, in small business, it's not how much you make, it's how much you keep or how much the government lets you keep. So let's get right into it. First of all, now, if you ever doubted that I was a lawyer, here you go. This is my proof here. Lawyers always tell you what we're not going to do before we tell you what we actually are going to do. Obviously, I mean, while I've been doing programs for SCORE now for 45 years, hard as that is to believe, time passes very quickly. I am not part of the SCORE organization. I am not myself a SCORE mentor, so I can't speak in any official capacity for SCORE. Whatever you hear today is entirely my own view of the world. The second disclaimer, though, is the more important one. Whenever you do a program like this, there's a very big difference between giving out legal information and giving out legal advice. You know, here's what the law is generally all about. That's legal information. That's what we're going to be doing today. Now, Peter, this is why you should do this, and Bob, this is why you should do something different. That's legal advice. That's one-on-one, which I really can't do in a program of this nature. I will certainly respond to questions, and I'll try to give you the best answers I can. But if you do hear something I say here and you decide it's a good idea and you do it and it doesn't work out and your business fails, you file bankruptcy, your spouse divorces you, the kids don't talk to you, the dog's peeing on your leg, and you're living in a diaper box under the Tappan Zee Bridge, now known as the Mario Cuomo Bridge, you can't sue anybody. That's what this little disclaimer is all about. All right. no one likes to think about the legal and tax stuff when you're starting a business. I mean, when I worked briefly for a large investment bank back in the 1980s, and they used to refer to the legal department as the sales prevention department. So it was one of those places where, people would like hold objects up when they walked by our door so people would see them. It was that kind of thing, until a problem happens. That's when I get calls. One of the truest things you'll ever hear in a program like this, people do not call their lawyers when they're having a nice day. Okay. When I never get calls from people, hey, Clip, the sun's shining, beautiful day today, early fall day. I just thought to pick up a call you because you're my lawyer and I love you. If anybody ever called me with a call like that, I think I would drop dead as a shock, or I would probably call Homeland Security on them because this person's obviously not in their right mind. I mean, usually when people call their lawyers, not only has the wolf broken down the door, it's like eaten up half their body already by the time they call me. That's when people start focusing on the legal and tax issues, and that's when it's too late. I don't do litigation. I don't do courtroom work of any kind. I've only seen the inside of a courtroom twice in my life. Once when I was sworn into the New York bar, second when I was sworn into the Connecticut bar. And that's the only inside of a courtroom I ever want to see. And I don't want to see my clients. Whenever a client of mine gets sued, an angel dies. Okay. And I really try to avoid that as much as I can. So I put together this program just to sort of summarize. These are the 10 most common calls that I get from my small business clients. And here's some general information about how you can possibly deal with these things if you're having them in your business. So I'm going to do this David Letterman style. I'm going to start with number 10 and go down to number 1, but there's really no ranking. They're all important. Mistake number 10, first one we're going to talk about today, not protecting your personal assets when you start a business. Okay. When most people start out in business, they are what they call a sole proprietor. That is an individual human being who is engaged in a trade or business. And when you start out as a solo practitioner, you are totally naked. There is no barrier between your business and your personal life. Now, that may be true as in real life as well, too. You may be working 90 hours a week in this business, so you don't have a personal life. But the fact of the matter is, if God forbid you are ever sued as a sole proprietor, the plaintiff, the person suing you, can basically get all your assets, everything you own, business, personal, whatever, your kids' college tuition fund, your house, everything is at risk. You are totally naked. And depending on the business, that might be okay. There are certain businesses that are okay being sole proprietors. Let's say, for example, you're selling bobblehead dolls on eBay. Okay, it's a good example. You send in a customer orders a bobblehead doll, you send it out in the mail, and it breaks. It gets destroyed in transit. The customer complains. They're not going to sue you over this. They're going to complain, and what are you going to do? You're going to give them a new one. If you don't have a new one in stock, you'll give them their money back. And if you're a jerk, if you blow them off, they're going to post negative feedback on eBay and flame you on social media, and you'll probably never be able to sell stuff again. That's what happens. Nobody is going to sue you in court for a $15 bobblehead doll. It costs somewhere upwards of $10,000, $15,000 just to start a lawsuit in Connecticut today. And people aren't going to do that for very, very small amounts. Although they might file a small claims action if they're in Connecticut, they might do that. But people aren't going to sue for something like that. Now, if you are selling cars, however, or motor vehicles on eBay, different story. You sell a car on eBay, they come to pick it up, and the car, the brakes fail on the way going home, people get killed. You're going to get sued. Yes, that's going to happen. So even, in a business like eBay selling, your risk profile is very different depending on the types of stuff you're selling and who you're selling it to. So, for most businesses, you will want to there are some things you can do to put a wall up between your business assets and your personal assets. With one of these wall things in place, if you are sued, God forbid, they can still get to your personal assets. That's why you need to get insurance on those things. But your personal assets, your house, your cars, your kids' college tuition fund, whatever, they're behind the wall and they are protected from attack. A corporation, when you think of a corporation or an LLC, think of it as a wall between that basically says, okay, I'm putting my business assets aside, and this is the only thing, Mr. Plaintiff, that you can get. If something should go wrong, if I screw up, if I do something wrong, you can certainly sue, but you can only get to my business assets. You cannot take my house, my car, my personal autographed photo of Elvis, whatever I might have. Okay, that's what forming a corporation or an LLC does for you, and it's a very, very good thing to do. If you're not sure about your risk profile, form an LLC. LLCs are very easy to form. Taxes are very easy. You don't have to do a lot of paperwork. You can conduct your business. If you have partners, you can conduct your business on a handshake basis. And you have limited liability, which is the main reason that you want to set up one of these things. Just when you do one of these, make sure that your customers, your clients, your vendors, everyone that you come in contact with know that you have a corporation or LLC. A big mistake that people make when they form corporations or LLCs, they spend money, they form them, they get the nice big black book with the minute book and the loose leaf thing with the seal, which nobody knows how to put together. It's terrific, but then they put it on a shelf and they forget about it, and that's dangerous. If I'm doing business with Cliff Ennico and I don't know that Cliff Ennico has a corporation or LLC, I assume that I am doing business with Cliff Ennico. So if something goes wrong, Cliff Ennico is the one who's going to get sued. Okay. But by forming a corporation or LLC, you have to stick it in people's faces on your stationery, your letterhead, your business cards, your website, your social media. Everything that you are doing that is customer or client facing needs to say Cliff Ennico LLC. That way, when people do business with you, they see, oh, it's an LLC. He's got limited liability, and the judge will support you and say, yes, that's right. They knew they were dealing business with an LLC, so you can only get the business assets. Now, if you heard, if you heard what I said a little bit a while ago, you also got a nice second piece of advice too, which is to get as much insurance as you can possibly get for things. Because even if you have this wall in place, even though you have a corporation, you have an LLC, your personal assets are behind the wall and they're safe, but their business assets still can be attacked, and the plaintiff can still get those. Now, when you're first starting out, that's not a lot, but you may have, few $1,000s in business assets down the road. You may have equipment, you may have machinery, you may have office furnishings, your inventory. There are things that the plaintiff can get at after some point. So you do want to have insurance on those things, and specifically what they call errors. If you're a consultant or a service business, what we call errors and omissions insurance. That is basically malpractice insurance for someone who's not a doctor, lawyer, architect, engineer, whatever. They call it errors, ERRORS, and emissions, or sometimes they just call it E&O coverage. So that's number 10, and a very important one, which is why I spend so much time on it. This is not a big one, but it's something that some people do. So I thought I'd mention it as number 9. When you're looking to start a business, you want to avoid being sued. And by the way, I have an excellent YouTube video. Peter mentioned my YouTube channel, which I'm very grateful about. But I actually have a nice 1-hour video on keeping lawsuits at bay. I mean, if you're really worried about getting sued in your business, spend an hour watching this video. It's totally free. All my stuff on YouTube is free. If you go to youtube.com and search for Cliff Ennico, just like it says here, you'll get to all my videos. But the one you want here is Cliff Ennico lawsuits. If you search for that, those 3 words, you'll probably get right to the 1-hour video that I did, where I talk about the 5 things that you should be doing, or at least should consider doing, to keep yourself from being sued. And one of them is this. Let's say, for example, that you have a very expensive house. Your spouse is not involved in the business. They're not going to be helping you with the business until you get this idea. You know what? Let me put the house in her name or his name. Let me put this house that way. If I do get sued, God forbid, they at least can get my house. I know I don't have to worry about that. Okay, it's an okay thing to do, but there are some things you have to think about. It's not for everybody, and I don't always recommend it. It depends on a number of things. First of all, if you are deciding to do this, make it a legal transfer. So if you're transferring a house, you have to file something called a quitclaim deed with your town clerk's office. If you're outside of Connecticut, by the way, it's probably the county clerk's office. If you're in New York or New Jersey, you would file this in the county clerk's office. Connecticut, we do things by towns. Our counties don't really mean anything. It's all towns and villages and stuff like that. A little back to the old Puritan days. We're still living in the 1600s here in Connecticut. But you didn't hear me say that. So make sure you do a legal transfer. transfer. If you are transferring to another relative, someone who is not your spouse, make sure they change their will so the assets go back to you if and when they die. I had one of the very first clients I had was a gentleman. He had a beautiful home in Westport, and he owned it free and clear, no mortgage. He was a single man. He was, gay man, LGBT, and he was looking to buy a franchise, a service franchise. And when you sign up for a franchise, you have to personally guarantee the obligations of your LLC or corporation. They don't like dealing with LLCs. They want to deal with you, and they want to know you're on the hook if things go bad. So they were asking him to sign a personal guarantee. He didn't want to lose his house. He didn't have a spouse, but he did have a mother who adored him. So he put the title to the house in his mother's name to try to keep it out of the franchise hooks. Mom was great. She knew it. She loved it. She knew exactly what he was trying to do, but they forgot to change her will. So when she died a couple of years later, the house went through her residual estate, the sort of the leftover, whatever you don't give away to specific people in your will goes through what they call the residual estate. And so he and his 5 brothers and sisters shared the house that he once owned for himself, free and clear, and the brothers and sisters hated each other. That's when I got the call. That's when he called me, and it took us over almost 10 years to buy out all the siblings so that he could once again get title to the house that he once owned free and clear. So there's my horror story. And then secondly, and this is common sense, you probably have already thought about this, do not do this at all if you are at all unsure about your relationship with your spouse or the other person. If you transfer a house to a spouse, you are making a legal transfer. And if you ever get divorced down the road, if you come home and there are some unexpected people in the house that you didn't expect to be there because you came home early from work one day, you are not going to be without a spouse. You're going to be without a house too. And I'm going to see you on the side of I-95 with a sign saying, "We'll do whatever for food." I do not want to see any of my clients standing on the side of the road with a sign saying, "We'll do whatever for food." So that's number 9. Okay, that's a little one, but it is important because a lot of people think about doing that. Number 8, underpaying taxes. Okay, whenever you are in business for yourself, the government is your partner, and you do have to know something about the taxes to which you are subject. They vary widely from state to state. Make sure you get a good accountant or a tax advisor, bookkeeper, H&R Block, somebody who can help you with this. It's very important. Almost all businesses have to register with both the IRS. You have to get what's called a federal tax ID number, an EIN, which most businesses do. You also have to register with your state tax authority. Most states, including Connecticut, have a questionnaire. It's an online thing. You fill it out. What kind of business are you in? Here are the taxes we have. Check the ones that apply to you. And now here's where you file your returns. It's all done electronically these days. In Connecticut, if you are subject to sales tax, you pay sales taxes once a month, unless the state tax authority. It's called the Department of Revenue Services in Hartford, Connecticut. In every state, though, it has a different name, but usually the word revenue. If you go online and search for the name of your state followed by Revenue Services or Revenue Department, you'll probably get a link right to their homepage. It's very easy to find these people these days. Make sure you register for to the taxes that you owe. If you are selling on Amazon or eBay or one of the big online platforms, they handle a lot of your tax work for you, but you still have to register with your state tax authority and let them know that you're selling through eBay and Amazon, so that they don't ding you for taxes years from now, even though they've been paid by eBay or Amazon. That's a big mistake that online retailers make. Know when your tax returns are due. They keep changing these things. It used to be that corporate tax returns were due on March 15th. Now they're due April 15th, and the personal tax, the LLC returns are due March 15th. They keep changing this stuff. Make sure you know what the deadlines are due. If you have to go on extension, that's fine, but you still got to know the deadlines, and you still got to pay your taxes by the original due date if you owe money. Report every penny of your income. There are only two ways that people can screw up on their taxes. I learned this long ago, actually, from a district director of the IRS. He and I had lunch once years ago, right after I graduated from law school. He was a friend of mine from college, and he told me this. He said, "There's really only two ways that you can screw up on your taxes. Either you fail to report all the income you made during the year, or you get crazy and you take too many deductions that you're not qualified for." And if you have a choice, if you have to screw up on your taxes, it's always better to go the second way and overstate your deductions. deductions, because the IRS are not fools. They're not crazy. They know the tax code is extremely complicated. A lot of the rules regarding deductions are very complicated. Even CPAs, accountants, make mistakes on this stuff. So they're usually pretty forgiving. If they see that you just were a little aggressive in your deductions, they'll snap you on the wrist a little bit. There might be a little bit of interest in penalties, but you will survive the experience. They will not kill you. But if they see that you have understated income, though, if you didn't report all the money you made, they do not see that as a harmless mistake. They see that as fraud, and they will come after you. They figure a grown adult should know how to add up a column of figures and figure out how much they made during the year. So they will come after you with baseball bats if you do that. So always report whatever else you get wrong. Get this one right. Make sure you report every penny of your income. If you're in a business like mine where you get lots of 1099s and W-2s at the end of the year, get a calculator, total them all up, and make sure that whatever you report to the IRS is at least that amount. You'd be amazed how many people do this. They submit a tax return that says, I made 100,000 last year, but when you total up all the 1099s that the IRS has a copy of, it's 120. You would be amazed how many people make that mistake. Always make sure that you total up your 1099s and make sure that what you report to the IRS is at least as much as that. And then last but not least, if you're in a service business, you probably pay the dreaded estimated taxes. These are due 4 times a year: April 15th, June 15th, September 15th, and January 15th. I hate them as much as you do, but make sure that you calculate those correctly. The IRS is very aggressive in reporting penalties. If you're not sure what to do, the IRS does have a safe harbor. What you do is you take your tax liability from the previous year, how much you actually owed to the IRS last year, tack on 10%, divide by 4, and if you made that amount every month, every quarter, and then clean it up at the end of the year, they will not come back and report delinquencies from quarter to quarter. They'll just wait until the end of the year, and if you're still short at the end of the year, you'll get penalties, but you can always clean these things up at the end of the year. So always use, it's called the safe harbor method of calculating estimated taxes. Make sure you use it. Okay, not planning for the business in the event of death, disability, or divorce. Let's face it, crap happens to people. I'm 71 years old right now, so this is very much on my mind. I mean, let's face it, when you're in your 20s and 30s, you never think about dying. You never think about getting into an auto accident. You don't think about, getting divorced or something, and your spouse all of a sudden cleans you out and you're paying huge alimony payments every month. You don't think about stuff like that when you're in your 20s and 30s. Let me ask you, when you get to your 70s, it becomes more present. You become more aware of the beating of the wings of the dark angel. You do become more aware of this stuff. I mean, when I go to a liquor store now, I don't buy the wine that says best drinkable in 5 years. I mean, I don't know. I'd rather have the wine that you can drink as you're leaving the store. That's the kind I want now. I don't know if I'm going to be around in 5 years. I don't know. Hopefully I will, but you never can tell. So you got to plan for this stuff. Plan for succession. Find out, no matter how old you are, think about, what if I were to get hit by a bus tomorrow, who would run this business? Who would take over for me? Who would handle my open client files? Start grooming them now. I've got 2 lawyers, one in New York and one in Connecticut, that I regularly refer business to. And the understanding is that if anything were to happen to me, my wife would call them and they would take over whatever my active matters are. Eventually, I will probably sell my practice to these 2 people. The New York person will get the New York stuff. The Connecticut people will get the Connecticut stuff, and everybody else, anything else, just be a grab bag between the 2 of them. But make sure you think about who's going to run this business after you're gone. If you have children, which of your children are the most likely to carry on the business and the family name? Start thinking about this stuff and start grooming them now, so that if, God forbid, something does happen to you, you have a sudden heart attack or something like that, they can just step right in and with a minimum loss of cash flow. If you have partners, make sure you sign a buy-sell agreement. This can be a separate agreement, or it can be part of your operating agreement or your shareholders agreement if it's an LLC or a corporation, which allows them to buy your stake. So if you do drop dead suddenly and your spouse is not able to run the business, your partner partners can basically buy your shares back for fair market value. You always do it for fair market value. Don't ever do a buy-sell agreement that says that if somebody dies, you can buy the shares back for $1 or something like that. The courts never enforce those. Make sure it's always for fair market value as determined by an independent appraiser. And then make sure that your will transfer your stake in the business to your right heirs. Remember that situation, the client of mine with the big house in Westport that didn't do this? Well, it also happens. So even if you're not transferring the business to anyone, it's very important that you do this. If you've got 3 kids, Mo, Larry, and Curly, and Mo is clearly the heir apparent. Mo is the one who owns the business. Larry and Curly are off on a commune somewhere smoking magic mushrooms. You definitely don't want them to have a piece of the business. It's Mo you want. Make sure that you put a specific bequest clause in your will saying, upon my death, my shares of stock, my LLC interest in whatever the name of your business is, goes to Mo exclusively. Make sure you do that, because if you don't, again, it will pass into the residual estate, and Mo, Larry, and Curly will have 1/3 of the business each, which means that Larry and Curly effectively run the business, which is exactly the opposite of what you wanted. So make sure that you think about your estate. Whenever you think about death or disability, think about your estate planning. Yes, magic mushrooms, that's actually a thing. They're called, I can't remember, I think it's called there's a Mexican name, an Aztec name for it. I think it's called ayahuasca or something like that. When I was a kid, when I was in the 60s in college, there was an author called Carlos Castaneda who was very big into this. He was a sort of a philosopher, spiritualist from Mexico who was very into, Aztec religious practices and stuff like that. And he was a big follower of magic mushrooms. What can I say? It was the 60s. All right. Most of you are very lucky you didn't have to live back then, by the way. Okay, number 6, not having a terms of service document on your website. If you have a website for your business, and by the way, every small business needs a website. I don't care, I know we live on, I can hear some of you groaning out there now. Oh, Cliff, it's 2025. It's all about social media. It's all about the internet. It's all about AI. Yes, I know about all this, but the fact of the matter is when people are looking for you, they want to see a storefront, a virtual storefront, and that's your website. Every small business, attorneys are the worst offenders here. I can't tell you how many times I want to refer a business to a lawyer and I cannot find them online. I can see all their reviews. I can see what, avo.com or yelp.com is saying about these people, but I can't see a message where they're talking about themselves saying, now here's my practice, here's what I do, here's how much I charge. You should always have a website for a term of business, and that website needs to have a basic terms of service document. Do not ignore the legal stuff. This is where you put your disclaimers. This is where you put those little, like that little slide that I had at the beginning of my presentation saying what I'm not going to do for you. This is where that goes, is in the terms of service document. Have your attorney draft one and post it on your website's homepage. If you are selling stuff online, if you're in e-commerce or you have a SaaS software product that you license online, make sure that the client accepts the terms before they buy. How many of you here have done this? You bought something online, you're in the checkout counter, and all of a sudden the screen pops up, here is our terms of service, 50 pages of legalese, right? And you have to scroll to the bottom to accept it before they'll let you give them your credit card. This is what you should be doing with your customers. There are cases, by the way, saying that if you use that scroll wrap feature where you have to scroll down the thing before you click on the I accept button, that makes the contract more enforceable, and you definitely want to have this contract enforceable. The 2 things you want in there, even if you're not selling stuff online, there are 2 things that have to be in that document. Number 1, there has to be disclaimers. And there are 2 kinds of disclaimers. There are what we call warranty claim disclaimers, saying that, like in mine says, I will warrant that I will do all my work in a professional manner, but I can't guarantee that you will be successful or that your business will succeed. I can't guarantee results. No consultant or lawyer ever can. And the second is what we call a limitation of liability clause, which says that even if I do screw up totally, all I have to do is give you your money back, and that's it. You can't sue me for anything else. It's limited to a certain dollar amount. The third thing you need to have in your terms of service is an arbitration clause. You always want, if somebody does sue you, God forbid, you want to be in arbitration. You don't want to be in a court of law. Arbitration is like Judge Judy. It's very informal. Each side tells their stories. Judge Judy figures out who she likes better, and that person wins. You want to be in that scenario. You don't want to be in a situation, and you especially don't want a class action being brought against you by 50,000 people who feel they were aggrieved by your website and your business. You do not want that. So make sure all of that stuff is in your website terms of service. Very important. I spend a lot of time doing that kind of stuff for my clients. Okay, number 5, and this is a big one. Treating employees as independent contracts. A lot of people, and a lot of very bright people, people who have been in business for years, have trouble with this. They think that that they have the right to choose whether someone is an employee or whether someone is an independent contractor. Everybody, a lot of people think that, and it's not true. You do not decide who's an employee and who's an independent contractor. I mean, let's face it, if you did have that right, everybody would choose the independent contractor. They would click on that box. Why? Because employees are expensive. You have federal and state withholding taxes and FICA, FUTA, Medicare tax at the federal level that you have to pay. It's as much as 15 to 20% of the employee's total compensation goes to taxes, and it has to be paid every couple of weeks, every month, or else the IRS really comes down on you with baseball bats. You want to have as many people be independent contractors as possible, because that way you do not have to withhold taxes. You don't have to deduct taxes from their pay. You just simply send them a 1099 at the end of the year, and it's their responsibility to pay taxes. But you do not make that choice. Here's what it all boils down to, and I'll make this very simple. Okay, this is not 100% legally correct, but it's good enough for you. It's forgive me for saying it that way. It's good enough for everybody on this call. Basically, here's the thing. It all boils down to this. Do you have the ability to direct and control this person's activities while they are working for you? So let's say that I'm working for you, and let's say that you come up to me one day and say, hey, Cliff, stop what you're doing. I don't know what you're doing right now, but stop what we just got a big order from Amazon. We want to get this out today. It's a big order. I want to get it out to the UPS store before they shut down at 6 o'clock today. So stop what you're doing. I need you to help me pack these boxes, load this truck up. And as soon as I head out to the UPS store, you can go back and whatever it was you were doing before. If you have the right to jerk me around like that and take me from one project to another, that's what we call directing and controlling the person's time. And that person is an employee. They are not an independent contractor, even if they only work for you a few hours a week, even if they're only like an intern that works Wednesday afternoons. If during that Wednesday afternoon you can do that to them, that makes them a part-time employee, not an independent contractor. Now, take me on the other hand. I am an independent contractor. If I'm your lawyer, you'll never have to worry about me being considered your employee. First of all, you can never get a hold of me. I'm always on the phone. I've got 10 clients at any given time that I'm working on. And while you can certainly give me a deadline, you can certainly say, hey, Cliff, I need you to look at this contract, and I need your answer by tomorrow because I'm meeting with the guy and I want to sign it. You can certainly do that to me. And if I respect our relationship, I'll make sure I meet the deadline. But what you can't do is you can't say, stop what you're doing right now. Stop this webinar. Stop it right now. I got a thing I need to do. You think do this thing, and then you can go back and finish your webinar. You can't do that to me. That's what makes me an independent contractor and a 1099 as opposed to a W-2. So here are some of the rules. Ask your contractors if you are the sole source of their income. If you're working with a person that you think is an independent contractor, but they're not working with anyone else, and you're their sole source of income, you could be held out as their employer, if the IRS ever audits you or them. Secondly, make sure your contractors have the opportunity to work for other clients. If you're keeping them busy 80, 90 hours a week, they don't have time to go to the bathroom, much less work for somebody else. The IRS is going to look at that and say that person's an employee. And then last but not least, do not require your contractors to work specific hours. Independent contractors have the right to decide what their working hours can be. Oh, yes, I know your contract is due on Friday. You told me you'll want the contract by Friday, but between now and Friday, I get to decide when do I do Peter's thing? When do I work Joe's thing? When do I do do Bob's thing. I get to decide that, not you. That's what makes me an independent contractor. So hopefully I've simplified that. This is a big deal. Get this wrong, and the IRS will almost certainly audit you at some point. Small business owners always make mistakes when it comes to the employee versus independent contractor classification, and the IRS auditors love going into this stuff. So it's an important one. Okay, now, big mistake, signing legal contracts without having a lawyer review them. Okay, now let's face it, lawyers are expensive. I'm expensive. I'm $400 an hour, although that's not graven in stone. There's some things I can do for a flat fee, which is less than that. But lawyers are expensive, and let's face it, people don't want to pay legal fees. They don't. It's sort of weird. I always envy the doctors. When you go to the doctor and they tell you you got a tumor, it's got to come out. You never haggle the price of that. You never do. You never do. But if it's a lawyer, well, I need this contract review. Great, it's going to cost you $500. What? $500? It's only going to take you like a few minutes to look at this thing. How do you know how long it's going to take me to look at a contract like this? If it's a 30-page contract, guess what? Yes, I've been looking at contracts all my life, but it's still going to take me a while to look at a 30-page contract and find all the stuff that's buried in there, folks. I hate to tell you, I'm going to run up a bill on that. People don't. It's just a different world that I envy the doctors. I envy the medical community what they get away with. I really do. But I'm sorry, I'm kvetching. I shouldn't do that. But well, seriously, even if I think you understand the contract, it's very tempting to look at a contract and say, oh, okay, this makes sense. It looks clear. All the numbers are right. Yep, this is what I said. Yep. Okay, you know what? I'm not going to involve Cliff on this. I'm just going to sign it and move on. It's easy to do that, but here's the thing. There may be things that are supposed to be in that contract that are not in that contract. And unless you live with contracts, like, somebody like I do, if I'm looking at a contract, I will say, oh, it's missing a frugal framus clause, and we need to get that in there because, okay, whatever. I will see stuff like that, but you will not, because you don't even know what a frugal framus contract is. Frugal framus, by the way, is a made-up word. It's a word I use, kind of like widget. It doesn't mean anything. But it's just, you don't know what's supposed to be in this. And there are a lot of nefarious people who deliberately leave things out of contracts because they think you're too dumb to see them and to spot them. So it's always a good idea, if you're on a limited budget, I have no problem at all, and most attorneys won't. If you just call me up and say, hey, Cliff, I got a real limited budget. Could you take not more than an hour, half an hour? Just take a look at this and see, is there anything here that's going to kill me? And if there is, let's talk about it. If not, I'm just going to sign. I don't want to nitpick it. I don't want to have a back and forth with this person. I just want to sign this thing and move on. That's perfectly okay to do that. And if I'm a good lawyer, I will know how to do that. I mean, there are some lawyers that will know I have to charge at least an hour. You don't want to deal with those kind of people. Okay. I mean, if a client does that to me, I respect the fact that you don't have a lot of money. I know you're not rich. You would not be calling Cliff Ennico if you had money. If Elon Musk would have called me, or Warren Buffett, or one of these people would have called me up tomorrow saying, hey, Cliff, I've heard about you. You're a great lawyer. I want you to represent my business. I would drop dead of the shock. I would. Billionaires do not call me. I get calls from people who are sort of like, they're barely scraping by, and, and they're watching every penny. I totally get that. And if I'm a good lawyer, I will respect that. So don't be afraid to ask, for some help with managing the budget. Most attorneys will accommodate you, but it's a good thing to do because it avoids the sort of mistake. Hey, Cliff, what's going on here? I'm doing this. The client's not paying me. Well, that's because you didn't have a frugal framus clause in there. I would have put that in for you. It's an awkward conversation to have with a client. Just remember, you cannot sue yourself for malpractice. Just remember that. If I look at something, if I screw up, you can sue me for malpractice, but you can't sue yourself for malpractice. Always remember that. If someone insists that you sign something and won't give you the chance to have a lawyer look at it, don't sign. That is the surest sign that I could think of that you're dealing with a crook. Okay, now don't get me wrong. They may say, now, look, you can show this to an attorney, but just so you know, we're not going to negotiate. This is our standard form contract. If you ever buy a franchise, for example, this is how they are. They don't they don't amend or change their franchise program. They want everybody signing the same document. But you can have your attorney look at it by all means, but we're not going to change anything. That's okay. But if they say you can't show this to an attorney, we do not want to show you. If you show this to an attorney, then you're the kind of person we don't want to deal with, and we don't want to do business with you. That's the surest sign that you are dealing with a crook and that there is something in that contract that you should object to. There's something in there that's going to bite you in the butt and that you need to have an attorney look at. So that's just a good sign. If you want to know you're dealing with a crook, listen for that. That's the surest way to know that there's bad stuff out there. Okay, going into partnership with the wrong people. Nothing burns your breakfast when you have your own business, like finding out that your partner is doing stuff behind your back, or they're not doing what they should be doing, or they're not showing up, or they're drunk, or they're just lazy, they can't complete projects on time. This, nothing burns your breakfast like this. And the problem with partners is that, unlike employees or independent, if something doesn't work out with an employee or an independent contractor, you can always fire them. A partner, you cannot fire. They own a piece of your business. The only way that you can legally get rid of a partner is to buy them out, is to buy out their share and go back to being 100% owner of the business. That's why I suggested that you do that buy-sell agreement where, if things are just not working out or whatever, you have the right to buy them out, at a fair market value, at fair price. No one's going to screw anybody here. I've learned over the years that if you try to screw someone on a contract like this, the courts will never enforce it. So you're better off just being fair up front and saying, look, if we don't, things that work out, I will buy you out for, fair market value. We'll have an appraisal done, and I'll pay you with, 5% interest over 10 years or something like that. It's good to have that agreement in place. That's a fair deal for everybody. Everybody goes their own separate way, and you can get to continue running the business without this crazy person who's an albatross around your neck, 24/7. I've been in some bad partnerships myself. Sometimes you just don't know people. Let's say, for example, though, that you're 50-50. And 50-50 is always a bad thing to do, by the way. Never do a 50-50. Why? Because if you're 60-40 or 70-30, if things don't work out, you can always just dissolve the company. As the majority owner, you can easily dissolve the company. You divvy up the assets, like a divorce. You divvy up the assets between you. He gets the sweater, you get the cat, and everybody. That's a famous country song, by the way. You can go your merry ways, and you can basically go on with your lives. Okay, but if you're 50-50, that's hard to do. If you disagree with someone and they're 50-50, the company is what we call deadlocked. It can't move. You can't move without him or her. She or she cannot move without you. That's a problem, and a real problem. And you need to have something in writing that says how you're going to deal with that. There's something called a golden rule buyout clause. There's something called a Russian roulette buyout clause. I've written about this. It's in one of my YouTube videos, about, dealing with partners. I have a YouTube video on dealing with partners. Yeah, you want to try to get to a result, and if you can't, there is something called judicial dissolution in virtually all states that basically says that if the company is really deadlocked, either partner can petition the local superior court to issue an order dissolving the company and forcing a division of the assets and forcing a divorce. Every state has some form of this, and you want to talk to an attorney who specializes. Now, this is where you need a litigation attorney. It's a court proceeding, so you need someone who actually does courtroom work. You wouldn't come to somebody like me for something like this, although I can refer you to someone who does if you're in need of this. But it's sort of like the final solution for a situation where you just got to get a partner out of your life, and you don't have a cousin Vito who can just bada bing bada bong take care of the situation. By the way, that's not legal. You can't do that. Okay, don't even think about doing that. Forget I said about that about cousin Vito. Although everybody needs a cousin Vito in their life. Everybody needs a bad cop in their life, and in my case, it could be your spouse, it could be somebody else, but everybody needs a bad. That's really a lot of what I do for people is that I'm their bad cop. When my attorney says I can't do this, that's kind of where I choose to be. Okay, so that's a bit for partners. Number two, okay, not protecting your intellectual property. Now you're saying, okay, this is for the software people. I can go to sleep for a few minutes. No, every business has intellectual property, even if it's just your name, your store name, Vito's Pizza or something like that. I mean, believe it or not, that is intellectual property, and that has value. If there are 3 different companies, pizzerias in town called Vito's Pizza, there's going to be a lot of confusion. People aren't going to know which Vito's Pizza is the right one. So, it's a good idea to think about your intellectual property may be the most valuable asset you have. I deal with a lot of clients who are doing brands. They're doing like national brands. They're rolling out a product, but they want to make a national brand out of it. The name is probably the most important asset that the business has. It doesn't have, people don't have to do bricks and mortar businesses anymore. There's no machinery, no equipment, no inventory. Although, there's a feeling now that we've gone too far this way. We need to bring manufacturing back, into the country where companies actually do have physical assets again. Too many companies, the only assets, go home every night. And that is a problem. When you're trying to value a business, especially, it's a very, very difficult challenge to value a business like that. But in most cases, the intellectual property, the patents, trademarks, copyrights, the name of the company, that is the most valuable stuff you have. The secret sauce, the secret formula for making the tomato sauce, whatever, the way you make the mozzarella, that kind of stuff. Always do. Here's the rules about intellectual property. Always do a thorough patent or trademark search before, a trademark search especially. It wouldn't be patent, it'd be a trademark search. Before you name your company product, make sure that you can trademark the name. A trademark is basically a legal monopoly. It doesn't, it's people think, oh, trademark, it means you own the name. No, that's not right. That's not legally correct. When you have a trademark, you have a legal monopoly, which means that only you can make money selling that product or service using that name. If anybody else in the country tries to use the same or similar name for their product or service that's similar to yours, you can sue them for infringement and make them stop using it. Okay, if two names are confusingly similar in the marketplace, that's called infringement. And if you have a federally registered trademark, you win the case. It's a very important thing to do. If you are looking to build a national brand where you're going to be selling your products or services nationwide, the very first thing you should consider doing is getting a federal trademark, a registered trademark, the R in a circle. Okay. It's very important that you get that trademark. Now, you don't have to do a federal registration. It is expensive. It's going to cost you about $2,000-3,000 to do this. I personally no longer do trademark registrations. I work with a lot of attorneys, though, who do. They're all like me. They work out of their houses, and $2,000-3,000 is kind of the minimum for this kind of work, but it will save your butt later on. And if your brand is successful, that trademark is what people are buying. They're not buying pasta. They're buying Ronzoni brand pasta. And that's a big difference. You can always charge a premium for a registered trademark. Make sure you can get it. Make sure that the name is trademarkable, and also do a thorough search to make sure that nobody else has it. It's a heartbreaking thing. I had a situation many years ago. A client was they were publishers. They were setting up a publication and like a magazine, a zine, we used to call it back in the 90s. And they had a beautiful title for it. It was perfect. They had a great business plan. They were getting in traction from investors, and investors don't normally invest in magazines, but they were actually getting venture capital interest in what they were doing. And I begged them, I said, get a trademark search. Here's a trademark lawyer. I know him. Do this. It's cost you $2,000-3,000. Hit up a credit card. The name is so valuable. You want to make sure that that name is yours, that you have it. They didn't do it. They didn't want to spend the money. So they started the magazine. They raised over $1 million in venture capital. And a year after they launched, they got a nasty letter from a law firm in California, one of the big ones, saying that their client, one of the giant HMOs, health maintenance organizations in California, was using that name. They didn't have a publication with that name, but they were using that name for their in-house employee newsletter. Not even a publication that no one saw unless you were an employee of the HMO. And they wanted my client to cease and desist the use of that name because it was infringing their client's in-house. I fought like hell for these people. I called their attorneys. I talked to the senior partner. I had my client send a letter to the CEO of the HMO saying, look, this is really unfair, but they wouldn't back down. So my client had to change their name after they had raised $1 million in venture capital tied to that name. And within 2 months, they were gone. They were out of business. I hate when people don't do that. It is, yes, it is expensive, but if you're looking to build a national brand and brand recognition, you got to make sure that you can't be shut down by a cease and desist letter from some company that you've never even heard of, that thinks that your name is too close, too similar to them. So just keep that in mind. Always get a federally registered trademark. Not everything is trademarkable. So for example, if your name is descriptive, you cannot get a trademark for it. So if you have a garage and your name is Joe, you can certainly call yourself Joe's Garage. There's nothing illegal about it, but you won't be able to get a federal trademark for that because it's considered descriptive of the business. The best trademarks, by the way, if you're looking, there are companies actually that name products and companies and stuff. There are people who actually do this for a living. The best trademarks are those that have nothing whatsoever to do with what the product or service is. What does Monster have to do with either a caffeinated drink or raising or applying for jobs online? Yeah, both of those are monster. What does monster have to do with either of that? What does eBay even mean? It's a made up word. What is a Google? That kind of. I mean, really, use your imagination here. Come up with a name that's really cool, where you can get the website URL. The whatever.com. Make sure you can get the .com, the top level domain name for it, and then you probably will be trademarkable. Ronzoni brand pasta. I always tell people, try doing this. Whenever you're wondering if a name is trademarkable, put the name and then brand and then the type of product that it is. So Ronzoni brand pasta, Cliff Ennico brand legal services. Do that, and if it comes out looking descriptive, you're not going to be able to get a trademark for it. But if it makes sense as Pillsbury brand donuts, or something like that, then you're on your way to a trademark registration. You'll probably have an easy time getting the trademark registered. Last lot, what if you have intellectual property that's not that you can't get a patent, a trademark, a copyright on? So, for example, the formula for Coca-Cola, recipes, if you're a restaurant, these things cannot be protected by a patent, trademark, or copyright. And frankly, even if they were, you wouldn't want to register them because now they're public and everybody knows what they are. So what you might want to consider doing is, the only key is don't share your trade secrets with anyone. Those are called trade secrets. The recipe for corporate Coca-Cola. I understand the recipe for corporate Coca-Cola is kept in a safe somewhere at the corporate headquarters in Atlanta, Georgia, and only 3 executives of the company have access to the combination to that safe. That is how much Coca-Cola protects access to its recipe. And you may want to consider doing something like that. The minute an employee has access to the trade secrets, sooner or later, they're going to quit. They're going to set up their own operation, go join a competitor, something like that. You can certainly get non-compete agreements with those people, but they're very difficult to enforce. The best way to protect your trade secrets is simply do not disclose them with anyone. Okay, and now last but not least, we're actually almost finished with the program, and I see we got 23 questions, so we'll definitely take some of those. Glad we have enough time for that today. Biggest mistake, number 1, not seeking professional help before the you-know-what hits the fan. Every small business, the moment you start your small business, you need to build a team of advisors, and this should definitely include a SCORE mentor, by the way. SCORE is a wonderful program. I've been working with SCORE now for 45 years. I have referred hundreds, if not thousands, of clients to the SCORE program, and never have I gotten a call back saying this is a waste of time. This is a very worthwhile program. They will find someone who understands your business, and it's free. FREE, an entrepreneur's favorite word, is free. FREE. Take advantage of it. You're crazy if you don't. But you also need 3 professionals on that team of advisors, and it's a good business lawyer, someone like me who does contracts, who knows all the rules of corporate governance, who can set you up, who can do that agreement with your partner so that if it doesn't work out, you can separate cleanly, the prenup agreement, if you will, with your partner. A good accountant or bookkeeper, someone who understands the tax stuff, especially, is very, very important. Someone who can do your tax, not only do your tax returns, but also advise you on tax strategies that you want to adopt. And last but not least, a good insurance broker, very important. My insurance broker saved my life, actually. When I was first starting my practice back in the 90s, and I was going off on my own, I definitely needed malpractice insurance. So I approached a broker. She got me some quotes. We went back and forth, and I chose a malpractice insurer. And I'll never forget this. As I got up to leave the office, she sat me down again. She said, "Cliff, we're not done yet. You sit down. I'm not going to get you. I'm not letting you leave this office until you have a policy of disability coverage." And I said, "Disability?" I said, "Wait a minute, now hold it. Yes, I understand, in case I have an accident or something. But listen, I mean, practicing law, all I need is a brain and a keyboard. As long as I'm not in a coma, I can practice law. Do I really need disability coverage?" And she goes, "Oh, yeah. But let me ask you a question. You're working out of the home, right?" "Yep." "Okay. You want to see a client. What are you going to do?" "Well, I will go to their office, or maybe we'll meet at a diner somewhere." She goes, "Exactly. And how are you going to get there?" "Well, I'm going to drive, of course." "Okay. So let's say you go skiing up in New Hampshire, you fall, you break your leg, and you break your right foot. You lose the ability to your right foot. Well, great. I can still practice law." "Yes, but you can't drive a car. You can't drive a car without a right leg." Think about that. So how are you going to get to your clients? You want them to come to your house and disrupt your house? Your wife's not going to like that. I said, you're probably right. I fear her. I fear her very greatly. So I didn't want to take that risk. So I said, okay, well, okay, I hear you. You want to make some extra money. Okay, I'll sign up for a disability. I don't want to spend a lot of money on it, but I'll take out. Boy, I'm glad I did, because I will tell you, 6 years after I started up in practice, I was grilling hamburgers in my backyard one afternoon, Saturday afternoon, and we live in a very windy area. It's an old grotto. It's an old like a pig farm. It used to be at one time. So the wind blows around all over the place. And I used to keep this 20-pound rock on top of my grill cover to keep it from blowing all over the place. Well, I must have had, my hands were greasy, sweaty, whatever. I picked up this thing and I dropped this 20-pound rock 6 feet onto my bare foot, my bare right foot, smashed it to smithereens. Okay, you ever see the cartoons, Wile E. Coyote, right, where he hits himself in the foot and the foot goes like this? It does it in real life too. I got to tell you that. And the worst part was, my neighbor's kids were playing in the backyard next door. Do you know what it is to drop a 20-pound rock, smash your foot to smithereens, and you can't curse? Do you know what that feels like? It is horrible. I will tell you, my foot was smashed. I couldn't walk. I had to walk with a cane, and I had a big plaster cast on my foot for like 6 weeks. I had to hire someone to take my mail out to the UPS store every day. I was very glad to have that disability coverage. Stuff like that happens. So, these are the three professionals that you need in your life. Get professional help, and don't be afraid to talk fees. Don't think, well, he charges $400 an hour. That's where it's going to be. Don't be afraid to negotiate a little bit. Hell, you negotiate for everything else. You people are the best negotiators in the world. I see you people, especially you people who sell online. You are so cheap, you will not pay a penny more for anything. Yet when it comes to lawyers and professionals, you say, okay, well, that's the thing. No, negotiate just like you would with anybody else. Just don't negotiate too hard, because if I think you're a pain in the ass, I won't deal with business with you. These are some of my best-selling books. This is how you can get a hold of me, and I encourage you to send me an email if you have questions. I usually don't charge. I usually try to find at least a few minutes every day to answer, questions that come in from SCORE people. I may not get back to you right away. I am slow to respond sometimes, but I will try to get back to you. And with that, I see we have a lot of questions, so I'm going to try to do as many of them as possible. Peter, I'm going to go down the list, and we'll try to see how much we can do. We still have 5 minutes left, and I think I can get through most of them. If I am filed as an LLC, am I a sole proprietor or LLC, which should be checked off on your W-9? You want to check the sole proprietor box or single member. I don't remember the W-9 form offhand, but it usually says you're either a single member LLC, or if that option is not available, you would check the sole proprietor. You are taxed as if you are a sole proprietor, but that does not mean you're a sole proprietor for liability purposes. You do have limitation of liability as a single member LLC. Do we do these tax related things if I have not sold anything yet and have not made any money or revenue? The answer is yes. In most states, and I can assure you, Connecticut, if you start a business, if you set up an LLC or corporation and you have not registered with the state tax authority within X days, they will send you a letter saying, welcome to our state. We're glad you're operating a business here. Now, please tell us what taxes you're responsible for, because we think you're delinquent. Okay, I mean, it's not a nice letter to get. You want to forestall that by registering with your state tax authority. Do you have suggestions on finding an honest and well-qualified accountant and knowing how to evaluate what scope of services is appropriate to contract with them for? Well, basically, the scope of services is easy. You want them to do your tax returns, provide tax advice as necessary, and perhaps be available if you're ever audited by the IRS or whatever. I mean, usually a good CPA is what you need for something like this, and try to get somebody local, because it's okay that your lawyer can be a million miles away. Like if you're in Wyoming, you can certainly hire me, phone, fax, email. I mean, text. I mean, I'll work with you any way you want to, but your accountant is someone you're going to be living with. It should be somebody local who's familiar with the local rules and who also will be more accessible, so you can drive over there, sit down with them, and actually go through the paperwork if necessary. But otherwise, I mean, every state has a society of CPAs. Get some names from them, or just ask around. Go to some small businesses in the area and say, who do you use as your accountant? I'm a new small business. I'm not competing with you, but I really want a good accountant. So who do you recommend? Who are the good accountants that work with small businesses? Don't be afraid to do stuff like that. They may point you in the right direction, especially if they see you as a potential customer. Hypothetically, what if you actually add more to your return than the total of the 1099s? You are a very good citizen. And by the way, I always do. I never just limit it to the total that's on the 1099s in case I'm ever audited. You never want to report anything less than 100% of what you actually made. So I'm in the startup stage. When should I start worrying about trademark or what I should do to protect, the name? This is actually a very nice, interesting name. It could possibly be trademarkable. If you want, you can go to the trademark office at uspto.gov. Okay, it's not .com, uspto.gov. There's a little thing there where you can actually search, do a quick and dirty search. I would not rely on it, but if somebody else out there has this exact same name, it will be there. It will be in the database, and you can do it. So do that, and if it looks like it is trademarkable, then call a trademark law specialist and have them do a more thorough search to make sure that it's there. But I like the name. I think you might be able to guess something there for that. What if you are a sole proprietor LLC and there was no one to bequeath the business to? How to make sure my spouse isn't left having to handle all this cleanup? Well, let's put it this way. The way your will sets up, she will inherit the business when you die. When people do wills, the husband leaves everything to the wife leaves everything to the husband. So she will inherit the business, whether you like it or not. But what you could do is simply, the short thing is, at that point, there's really only two options. Either she will find a buyer or she will dissolve the business and shut it down. If the business isn't making a whole lot of money, she'll probably just shut the business down, and that's what should happen. Your lawyer or your accountant can help do that. If the business is worth amount of money, then the trick then would be to contact a business broker and find someone to sell the business to. And it might be a good idea to make a list of other people who might potentially be buyers of your business, maybe other similar businesses in your area, some of your competitors. Make a list of people to make your spouse's life or your lawyer's life a lot easier to find a buyer in case you die, or have a couple of other kids, and groom. I'm only kidding about that. If I don't have plans for anyone to take over the business when I'm gone, it's a one-person consulting firm. How do I make sure my business assets go to your heirs? Can you write business assets into a personal will? You absolutely can. In fact, if you don't, it'll happen automatically. It'll go through your residual estate, like I said before. So the answer is yes. The more difficult question is if you want your assets to go to one specific person as opposed to all of your heirs, that's where you have to have the specific bequest clause that I talked about earlier. If you have a professional speech therapy service, would you also add the arbitration clause to your website? Absolutely, to your website terms and services. You always want to have be an arbitration, not in a court of law, especially because let's face it, especially if there's a jury, because as a professional, you'll be seen as a deep pocket. Everybody thinks that lawyers and doctors have money, and speech therapists would be in the same category. So automatically they're on the plaintiff's side. You want to avoid that at all costs. Okay, how do I access that? Because normally, I'm sorry, this has to do with the recording. I'll let Peter respond to this one. Cliff, are you an attorney? Okay, I assume this person signed in late. Yes, I am. I'm admitted in New York, New Jersey, and Connecticut, although for many things I can work in just about any state nationwide. Drafting contracts and stuff like that is not considered, believe it or not, the practice of law. So I can really do stuff. I just did something for a Texas LLC this morning. A lot of my clients are moving to Texas, to Florida, to Tennessee, and I'm becoming more familiar with the laws of those states because I want to keep the clients. Okay, I have a professional organizing company and very occasionally need an extra pair of hands for large jobs. If they are independent contractors, do they have to be paid directly from the client rather than the client paying me, and then I pay the contractor? No, the answer is that it isn't. In fact, you definitely do not want them to be paid directly by the client, because then the two of them can do things together and cut you out of the middle. You want payment to go to you. That would not affect the 1099. The fact, though, if they can schedule their own time, if they're not locked into a certain schedule, that's what makes them independent contractors. The fact that they may work for other people, they may have a day job, they work for you on the side. That's the kind of stuff that makes them an independent contractor, and not where the payment comes from. Okay, and then yes, go ahead.
I'm sorry to interrupt. We are out of time. We've come to the top of the hour. I think this was a fabulous presentation. Thank you very, very much. Your contact information is on the screen, and you are always very willing to hear from listeners of your webinars. So if you have questions for Cliff, get a hold of Cliff. This session has been recorded and will be available on the SCORE Fairfield County website. We very much appreciate that we had people calling in from around the country. That was great. Continue to look for future SCORE webinars. It is available on the SCORE Fairfield County website as well as on the National SCORE website. Cliff, thank you so very, very much for the outstanding, entertaining, informative presentation.
It's always a pleasure. Thanks as always, Peter, and good luck to everybody out there. I hope you succeed. If I didn't get around to answering your question, shoot me an email. I'll do my best the next couple of days.
Thank you so very much. Have a great day, everyone. Take care. Bye-bye.